Hey guys, how's it going? This is Corey Smith here with CoreFX. Just want to do another quick video for you guys here. This one's going to be a little bit more on the basic side, but it's something really important that's often overlooked and even some experienced traders don't really truly grasp, that I think is a pretty crucial thing to go over. And that is market structure. As some of you that follow me know, I'm a trend trader. I only trade in the direction of the trend for the most part, and it's some people have trouble determining whether it's in a trend or a sideways market or uptrend or downtrend, and therefore it's kind of tricky for new traders, especially to really know, like, is it in an uptrend, is it in a downtrend definitively, instead of just guessing and whatever. So I'm going to go take a chart here and do a little structure and trend analysis with you guys and try to break it down a little bit more simple and see if you guys can kind of see where I'm coming from and get a better look at how this works. So I picked the Aussie New Zealand dollar. It's I just picked randomly, and it looked like it's got some crazy movement going on, so I figured this would be a good example. It's not a good trending pair. The Aussie New Zealand dollar, since their economies are really closely related, they are pretty confluent of each other, so they move pretty similar. So there's often a lot of times of choppy markets, as you can see here. There's no, if you can see from this end of the chart here to this end of the chart here, price is kind of in a giant range. It hasn't really moved too much, but there's trends within this massive move here. So I'm gonna try to analyze some of this for you guys. I'll start right over here at this low that price made. So starting here, this is how you use structure to determine what trend it's in, and just using structure to know what price is doing. We've got the high here that price made, right? So while price was under here, we see the lows there, and we see price is slightly moving downward, top left to bottom right, right? So we've got price here. The low was here. It was still the low there, still low there, but here it made a new lower low. We got a higher low here. I mean a lower high here, lower low. I'll go over this in a second better, but this is we'll just consider this chop because there's not really anything clear. This is what I'm talking about with these pairs, how there's just not much strong movement going on. So what we want to look for is a break of structure, major structure. This high here is the first break of major structure that we see. And as you can see, price came up, it retested the prior high, which is resistance, fell down a little bit, and then expanded range candle right here pushed through. So when this pushed through, what price did was come up here and make a new higher high. So what a new higher high is price came and hit a level it hasn't been at in the near past, and made a pivot point right here. Price came up and then reversed down lower. This is a pivot point, swing, whatever you want to call it, swing high. Price made a higher high with this move. This was the high. Price broke through, came up, made a higher high. When we're in an uptrend, there's two things we want to see happening. We want to see higher highs, like I just showed right there, and we want to see higher lows. These are going to be the swing points. These are going to be what we see when we have, well, any price movement is going to have swing points. It's going to be swing highs and swing lows. And basically what we're looking for is, in an uptrend, we want higher highs to be made. Price came down, retested the broken resistance level here, now as support. Hit that, and then bounced up, and look at that. Made a new higher high. Right here, we got a new higher high. As you can see. Price made a higher high, bounced off, came down, hit the 20 SMA, made a swing low, it's a higher low, shot all the way up here, made a new higher high, right? So in this impulse move, these moves, that basically this is how price action moves in any market. You've got impulses, got retracements, consolidation. You got an impulse. Retracement, consolidation, impulse. Right? That's how these markets move. And what we want to do as being trend traders is figure out at what point price is at. Is it in an impulse? Is it in a retracement? Is it an uptrend? Is it in a downtrend? Is it in a sideways market? So this impulse leg came all the way up here, and some people might say, oh, but it hit a high here and then retraced a little bit and then kept going, hit another high here, retraced a little bit, kept going. Maybe if you drop down an hourly, 30-minute, 15-minute chart, something like that, you could break that down. But on the daily and this chart that we're looking at, when the chart looks like this, you want smooth moves. This is all an impulse. There was no real stop. This was a little stutter. This is a little stutter. Kept going. This is the real move. Right? If you look at a weekly chart, there'll be strong, clear bars up. So that's the move we're looking for. Price came up once again, made another higher high right there. Right? So we got price coming up, making higher highs, higher lows. Once that new high was formed, we got a higher low. We got a higher low. Price came down again to touch that 20 SMA and respected it, made another higher low. Now price came off the higher low, came up, consolidated a little bit, and then retested the prior high. So, although this wick went and set a new higher high, on a lower time frame you might have a new higher high set, you might mark that. But on this time frame, we're looking at right now, the daily, and any time frame when you see a wick break it but the candle close under it, it's just a retest to a prior high. So no structure was broken. This isn't a new high. This isn't anything other than price retested the higher high. Now when we see a change in structure, we've got uptrend all the way, right? Higher low, higher high, higher low, higher high, higher low, retest. Then price came back down to the higher low. And what did it do? Broke right through it. So now, what this right here is showing is price is no longer in an uptrend. Right? Price now not only broke the the higher low, not only broke the 20 SMA, not only broke a trend line that we could draw anywhere from here to here, but it broke the 50 SMA, which with the way I trade, 50 SMA is like, if that's broken, that's very bearish. Not very, but you know, it's bearish. It's a bearish sign. You don't want to be buying when something's under the 50 SMA with my style trading and with most styles trading. But so now we have price broke through there, and what did it do? Came down here and made a lower low. Now in downtrends, we want price to be making lower lows, and lower highs, right? If in an uptrend we want higher highs and higher lows, in a downtrend we're going to want the exact opposite. So we got a lower low formed here, again just like clockwork. Price came up, retested, you could even consider this the first lower low, right? And it did it there as well. Price came up, retested the broken support, which was resistance, then broken support, support, broken resistance. Set a new lower high. That's what we've got right here. This is going to be a lower high. Right? Right there at this resistance. And then came down to make this new lower low. And then came back up, retested it again, but the candles closed slightly lower. And then shot down to make another lower low right here. So we got price made a lower low. Right? Okay, so now this is the established low. This is the established prior high. Right here. Price came up, respected it, started to turn around, and then boom, broke up all the way to here. Again, there's little stutters in the middle, but this is the main swing high. All the way up to here. What did price do now here? Higher high. So now we've got price back into an uptrend. Right? We've got the higher low down here. Not only did it break the prior lower high, it came up here and broke previous structure's highest high. that we have made here. Set a new higher high. Now this is when price can tend to get a little bit ugly, but strong uptrend, price came down. This was the new low, right? New higher low, right here. But price came up, failed to set a new higher high, didn't even come close to retesting, and fell off and made a new lower low again. So this is when it tends to get ugly. Now we're back into a downtrend. Got lower highs, lower low, and then broke prior structure here, back into an uptrend. Now what do we have? Higher high formed there, higher low formed there, higher high formed here, higher high formed here, higher low formed here, then higher low formed here. And as you can see, these are all micro trends within a bigger scheme trend, right? So overall, if we put this on the weekly chart, we would see an uptrend being respected in here. Because all in all, we have higher high, higher low, higher high, higher low, higher high, higher low. But when you break it down, which if you're trading the 4-hour and hourly time frames like I do, you break it down this way and you want to find these trends. In this leg here, I want to be a buyer, right? As long as these new higher highs and higher lows are being made on the daily chart, all in these pullbacks and breakouts and pullbacks and breakouts is opportunities to be buying. I want to be a buyer all through there, right? Now it's double tops. As you can see, this is a perfect, picture perfect double top right here. One, two. Failed to break higher. The candle body failed to go higher than this candle body. Price shot up, broke out some stops, triggered some breakout traders. Boom, sold off. Double top, neckline broken, one-to-one move at the top, came all the way down to here. Picture perfect double top. When I'm in this trend, and I'm buying, and I see price fail to make a new high, especially once I see a bearish candle like this come in, I'm no longer looking for buys here. Sets a new low, comes down, hits here, a new low, I'm looking to sell now. Selling. This candle happens off the low here, which was prior support over here. If you look left, then I'm not selling anymore. Price made a new higher high. All on this leg, in the lower time frames, I'm buying. Okay, so I don't want this to seem too crazy, confusing, or anything like that. I just want you to get used to how the market structure works, right? So higher low, higher high, higher low, higher high, higher low, failed to make a new higher high. This is a lower high, and then made a new lower low. Lower high, lower low, lower high, indecision, boom, lower low, lower high, lower low, higher high, higher low, higher high, lower low. See, chop. This is the times in here where trend traders like me, pullback, breakout traders, stuff like that, you do not want to be in here. There's nothing to be looking for to trade in that area. There's just no trading to be made in there. So then, once we're down in this area, this is the high. This is the low. Price comes up, breaks through the high, temporarily comes back, retests it, boom, new higher high. Higher low, can't break it, buyers take control, higher high. Another perfect double top. Lows established, lows respected, lower high. And this is also head and shoulders. Boom. Now we're back in a downtrend. Lower low, lower high, retest, lower high, retest, lower high, lower low. Right? So, basically, start going on charts. Pick a random chart. Go all the way back in time. Pick a random spot right here. Okay. We've got price is making, made this low, came up, made a high, came down, made a higher low, came up, made a higher high, came down, made a lower low, a lower high, kept going, failed to break structure, rolled over, new lower low, lower high, boom, broke the trend line, lower low, downtrend. Now, no longer looking for buys. Once this changes, flips around, we got a new low established, we're no longer looking for buys. Now what does price do? As you can see, we've got price broke through, lower low, lower high, lower low, lower high. You see? And I'm not following the micro trends in here, like I could be doing, because this came down, respected the prior high, made a higher low, and made a new higher high. Right? So this is a micro uptrend, right? Inside of this overall downtrend. So there's that's the way these markets move. They move with impulse, consolidation, retracement, impulse, consolidation, retracement, and then an impulse down, consolidation, down. That's how this works. So you can go on any number of smaller time frames and find intra trends. Look, in an hourly, you've got up, down, up, down, up, down, up, down. This is a huge trend on a smaller time frame chart. This is a big time trending move on a smaller time frame chart. However, when you use multiple time frame analysis in a top-down approach, if I'm buying or I'm selling, let's say I'm selling, if I'm trading the hourly chart and I'm selling, I want to make sure the overall direction on the higher time frames, like the daily, the 4-hour, the weekly, I want to make sure they're going in the same direction. The big money, the big banks, the big traders, they don't sit there and make 10 trades a day on a 15-minute chart. They're putting in position trades, they're putting in big, huge chunks of money, and they're letting this trend ride out. Or they're using big chunks of money to make huge transactions. They're not pulling. There's a lot of people that trade intraday, for sure, but the big banks, the big money, the big movers aren't entering and leaving the market 5-6 times a day. So you want to watch the higher time frames. You want to be in the direction of the overall trend on the higher time frames and trade that way. So if you see that on the bigger time frames, this has made a new low, and this is down here, even once it's coming up here and it's making these within the hourly chart higher highs and higher lows, I'm still going to wait for price to go back to that downtrend to show me, hey, time to start selling again. This trend line's broken. SMAs roll over and cross. New lows made. Bang. I'm back in the game. Pull back. New low. See? That's what this game is all about. If you're a trend trader like I am, which I recommend most people do, as that's just giving you an edge to begin with. Most of the pro traders won't trade against the trend. It's too much guesswork. Then you're going to want to know where the trend is on the higher time frame, to where it's going. We'll do a quick analysis of Aussie New Zealand right now. And if you look, you can just see overall the movement of the chart is going to be, from top left to bottom right, which tells you downtrend. But if you want to analyze it, we've got price made a high, right? It was in an uptrend, uptrend, uptrend. Made a low. Failed to go up to the high, made a lower high. Broke to the lower low. Retraced up, lower high. Pulled down, lower low. Back up, lower high. Came down, lower low. And price did come up here, break some structure, make some new highs, and then threw a shooting star candle. And boom, back down to a lower low. So we're in a downtrend still. Came up, set the lower high. Boom, all the way down here, lower low. lower high, lower low, and then we got the chop. Aussie New Zealand does oh so often. Came up here, didn't make a new high because this is the high up here, right? So these two times, lower low, lower high, lower low, retest to the previous high, higher low, broke. Boom. Perfect example right here of what we're looking for and why we want to find this stuff. High is established, low is established, and look at this. Look what we got here right at the low. Would you look at that? Got an inverted head and shoulders. Left shoulder, head, right shoulder. Price came up, broke out, shot down. This long wick came down back into the trading zone, the range here, and buyers pushed it out instantly. And if I was to, I don't trade just by looking at a chart and taking one, but if I was to just jump in this trade, jump into this chart and pick a direction to head, look at that. Price broke, huge impulse candle, broke the high, threw a doji up top here. If this closed as a, like not such a long wick, but like a full-bodied bearish candle, I would say, okay, this is a false breakout, it's back into the range. But if this body fails to close back under this resistance, turn support, and closes with a long wick as a hanging man candle right there, that's going to show me, look at this. Broke through the 50 SMA, broke through the 20. The 20 is now pointing upward. Price is above both SMAs, above the resistance. Higher high set, lower high, higher low. Boom. Look at that. Just using structure and the trend. No indicators other than SMAs. No indicators, no Fibonacci's, no anything. This is strictly price action, structure of the markets, and trend. And you can see, chances are, this is going to continue upwards. Chances are this is setting a new direction. We've got prior resistance support here. Price is most likely going to come up, bounce, fail to break lower, bounce off this, hit here, maybe do a little pullback, and continue an uptrend. We've got a newly established uptrend. Now, this is not a recommendation to buy or sell anything. This is simply me sharing my opinion on what I'm analyzing the charts look like. I'm not trading anything off this right now. I'm just doing a quick little analysis for you. And you can see how powerful this structure is. You can see how powerful just looking at prices between these pattern recognitions, prices, structure and flow of higher highs, higher lows, establishing support and resistance. These zones being violated, retested, and establishing new ones. That's all this is about. You learn how to read price, you learn how to read structure, you learn to know where it's headed and where it's going, and then you look for and then you develop a strict plan using rules, and you find a way to take advantage of these moves. It's not completely predictable, but I mean, come on, it's pretty damn clear. This stuff happens over and over and over and over again. And it's all about probabilities and lining up the odds. And learning market structure and trend direction is the foundation. It's the concrete you pour into the base of a house or a building before you build it. If you don't have the concrete and the foundation, the whole building's screwed. So learning this stuff, learning this structure, this higher highs, higher lows, establishing support and resistance, the direction of the trend and all that is completely essential to being a technical trader. It's make it or break it. You learn this early on and things will be a lot easier down the road. But anyways, this is Corey here with Core FX. Just doing a quick little market structure and trend direction video for you guys. If you like it, please leave a comment, like, subscribe. I know I've been a little slow with the videos, but I'm starting to get to them a lot more now with everything going. So keep an eye out for more videos. If you like what you see, subscribe to me. Again, this is no indication to buy or sell. I'm not responsible for any trades anyone makes based off this video. This is solely for educational purposes and my opinion and analysis. That is all. Thank you guys. I appreciate taking the time to watch this, and have a good one.